got 6 months. You need to bring in $1 million and we'll go from there. I got about 3 months in and I said, dude, this is not for me. My wife would beg to differ right now. I'm gonna take all of your life savings. I'm gonna take what little about I've had and I'm gonna go buy this piece of property.
Trust me.
I've got $400,000 of credit card debt right now. It was a shit show. It was bad.
The VA loan, as you know,
Yeah.
buying multifamily with zero down
Yeah.
and living in one unit while you rent out the others. There is no other mortgage product out
Yep.
there in the world that you can buy a multifamily for zero down.
I've hired a general contractor. Turned out he was just stealing money, materials off job sites. Fired him after I've already lost a few $100,000 on that. I'm then sued by the builder for fraud. Man, unfortunately, he committed suicide. I got that news and I'm like, what? I understand. I get it. And I'm just like, what the fuck?
You don't have to go to college for this degree and then this is going to be determined like your
Correct.
life.
But once you get a taste of working for yourself and being successful, it's really hard
I
to
hear
go
you.
back.
I hear you.
You've got to take the things that you've learned and go do something. You got to take risk. And risk doesn't necessarily mean losing it all, but if you're wanting something that's up there, you've got to start climbing.
Tell me your story. All right, welcome back to Beyond the Trenches. Today we're joined with Logan Hassinger. Logan, appreciate you coming on.
Thank you, Jay.
Yeah, first time actually meeting in person.
Yes, we've talked a lot over the phone, Facebook, plenty of groups that we've been a part of. So
Yeah, so that's how we met. I think it was in a Broken Bow Facebook group is how I at least found out about you.
yeah,
I'm like,
which
oh,
is
man.
what business partner and I started together
Yeah.
to kind of do a few things, help share what we had learned about Broken Bow back in 2020, and put like-minded people together and figure out how we could all work together.
Yeah. So let's go back though.
Yeah.
So prior to being the guy in 2020 and having a few things going on that
Yeah.
which we're about to talk about here
Sure.
in a minute, but prior to that, tell me where you grew up, how you even got into this. Did you go
Sure.
to college for this?
Yeah.
Tell me your story.
I started out, I went to school in HEB. I graduated from U.S. Trinity. I bounced around a little bit with college. I had a couple of experiences. I went out to Texas Tech. I went there for a year. My girlfriend, now wife, was supposed to follow me. She did not. So I was out there with my sister-in-law.
A couple of
and
experiences
brother-in-law.
of college. I like
Yeah.
that. I want to remember that.
A couple of experiences with college. I like to try them all out.
Yeah.
I came back, went to community college. I then went to UTA. I failed out of UTA unknowingly. I went in to visit with my person that helps set your classes for the next
Yeah.
semester, and she was like, "What are you doing here?" I was like, came back to put my next round of business classes in. She was like, "Oh, you got to change your major. You need to go to another school. You can go to nursing." Or I was like, "Oh." So
Oh man. Okay.
took those credits, transferred up to UNT, and finished at UNT.
Okay.
Got my finance degree there, and rolled into an internship with a wealth management company. It's a very small mom and pop shop out in Richardson, and was working with him for about 2.5, 3 years. I was in an analyst role, helping build out portfolios and helping advise kind of on the back end of client engagements.
Okay.
That rolled into more of a sales role. Hey, I need you to get out there and grow assets under management. And I'm like, huh? I can't go out and talk to people, guys that are in their 40s, 50s about moving $1 million over and joining you. So he's like, you got 6 months. You need to bring in $1 million and we'll go from there. I got about 3 months in, $300,000, and I said, dude, this is not for me. I can't do this. It was networking. It was going to putting yourself out there.
Right.
And at 24, I was not ready for that. Now, fast forward 15 years later, this is all I do. So it's just funny how it's come full circle. But I'd bounced around to TD Ameritrade, and then I was working in Dallas at an analytics firm for private equity, and I was taking some exams for trying to pass my CFA, which is a Chartered Financial Analyst.
Okay.
One of the toughest exams in the world to try to go out and get. It's 3 levels. It takes 3 years to accomplish. And I'd taken the first one, and it was about a month before you get your results because it's not immediate. I was in this large downtown Dallas, kind of like the World Trade Center area, and there was 500-600 of us all in there taking this proctored exam. So I finished up, and I was riding the train back and forth from Dallas to back over here to HEB. And I don't know who gave me the book. I don't know the recommendation or whatever, but it was Rich Dad Poor Dad. I had no clue what, I wasn't interested in real estate. I wasn't involved in real estate in any way. And I read that book and I was like, if I fail this test, I'm going real estate and I'll do it on the side until it becomes something. So I failed. And at that point was my biggest failure that, turned into be something pretty cool. So I hit the ground running and started accumulating a couple of rental properties. I was on Bigger Pockets. I ran into a mentor of mine that we're actually good friends, lives out in Phoenix, named Ben Leibovich. He was an up-and-coming guy on Bigger Pockets that always had some articles that he was putting out and liked to poke the bear when it came to real estate. So I gravitated towards him, and he started doing syndications out in Phoenix. And so I've invested with him all over the years as their Whitehaven Capital is what they do, or who they are. They do syndications out there. And then, I was buying rental property 2016, 2017. I had some really bad experiences with some tenants. I was at that point, I was up to 5 properties, 10 doors, had a fourplex, a couple of duplexes, and some tenants that were just nightmares. I think if you've done it long enough, you've got a couple of horror stories. And I was like, I'm done. I'm out.
And you're self-managing at this
And I was
point?
self-managing.
Okay.
I was, again, trying to build this portfolio of, I think it was like 73 properties I needed, 73 doors I needed before I could quit my job and like live the passive mailbox money dream.
Yeah, there's a lot to hear.
Yeah.
Okay, so I was going to ask you. So to recap, so the CFA exam, you failed.
I failed.
Okay.
Yep.
And then you were like, okay, I want to get into real estate.
Yep.
And when you say you were on Bigger Pockets, does that mean you were like researching on the website?
Yeah, I was just researching
okay.
like how to acquire a rental property, what's how to get a lease agreement, just
Right.
all the things that come along with trying to build up. All right, how to even talk with a potential landlord. So I was mailing out yellow letters and trying to get people to answer my calls back and say, hey, I want to buy your property.
Yeah. So you got a full-time job.
Yep.
What are you doing during this time?
At this time, I'm working for a company out in Dallas doing kind of entry-level analytics for private equity.
Okay, gotcha.
So I wanted to go into the private equity route, which is why I was taking
so
the
an
CFA.
entry level. I did a good job.
Yeah, it was a good
And you're-
job. I
and
mean,
you're
I was
learning.
making good money.
Yeah.
I was making $85,000 a year at 26 years old.
Yeah.
Couldn't complain.
Yeah.
So
After experiencing a few colleges.
yeah, I experienced a few colleges,
Yeah.
didn't like them, and so I was on a good track.
So talk to me about this because we've all been there. Especially if you own your own primary home and you're like, I want to get into real estate investing. I hear all these advantages of building wealth through equity. I hear there's tax advantages even possibly. So you find a home, you run the numbers on it, and you buy it. Like, talk to me about that first purchase.
So it was a call back from a guy that I'd mailed a letter to.
Okay.
I was using yellowletters.com, and it's been popular forever, but the fact that you can mail a letter and maybe somebody calls you back, it's just in the numbers. So he was the first batch. I mailed out 400 or 500 letters, and he called me back and he said, hey, I'm interested. I get these all the time, man, but I don't know why I called you, but I called you. I said, okay, I'd love to meet with you. And, 'cause my biggest thing is, I want to meet with you face to face. We can accomplish a lot over the phone or in a Zoom.
Right.
At that time, there wasn't Zoom, and this old guy wasn't getting on Zoom. So we met, I think, at a local hamburger spot, and he was selling the property because he had bought the home in a foreclosure from an attorney friend of his. He had used some of his parents' money to buy it. And this guy was in his 60s, and his parents were in their 90s.
Okay.
So they had passed away. He had property all over the place, but he had just gotten this one. He had fixed it up, a fourplex over in Euless, and he's like, I need to pay off my siblings for, they passed away, and part of their money, the inheritance was in that. So he's like, I sell this, and I can just be done with it. And so I'm like, okay. I ran the numbers. I had a little spreadsheet that kind of backed into based on the rents and what I could afford to pay, and I offered him $170,000 for a fourplex over in Euless. And he's like, "Man, you're getting a deal, but let's do it." So, and I've got this little checklist of things I'm supposed to be looking at when I'm walking around this house. I have no idea what I'm doing.
So you were okay. So hold on. This is an off-market property.
Off-market property.
Okay.
Yeah.
Which is, for one, that's really impressive because the part when I'm looking online, sometimes I was like, I want to get a investment property, especially here in Texas where property tax and everything on the MLS is sometimes I'm like, dude, I can't. The math isn't math.
I can't afford.
I can't.
And I did that. For 3 months while bigger pockets and jumping on Zillow and whatever was out there at that time. I was like, I can't afford it. I can't afford it, and the numbers don't work.
Yeah.
So I've got to go find something off market. So then I have bigger pockets again, off market properties, and so that's kind of what was my strategy and how I acquired everything.
And I'm assuming this wasn't cash or
nope, it was
or
not
hard
cash.
money.
Nope.
This was just conventional.
20% down.
Yeah. All right.
Yeah. So my wife and I were living in Watauga. We paid $95,000 for our first house. The guy had just flipped it. So I was kind of leveraging some of his experience because I stayed in contact with him. I was learning a little bit about, oh man, so you bought this? Yeah, it was a hoarder house. Bought it for 45. Put a little bit into it, selling it to you guys for 98. And so as we went to sell, because I was going to take all of our money, all the equity, and put it into this fourplex. We've been saving along the way,
Right.
so we had enough to buy my wife's grandmother's home, which is what we did. So we moved, and we took all the equity, and I put it in this fourplex. And she's like, "What are you doing? That's it's like $37,000."
And y'all are in your 20s.
And we're in our 20s.
That's a lot of money.
And it's a lot of money.
That's a lot of money,
Yeah.
period. But
And I
especially in
didn't
your
have
20s.
any money at the time. My money was simply her money that she had saved for since she was like 16, working at Sonic all the way through her jobs. And I came in with debt, student loans, ATVs that I'd bought, and having a good time.
Just dumb things.
Just dumb
Yeah,
things.
yeah.
Really dumb
Toys.
things. Toys. So reading that book, Rich Dad Poor Dad, also changed my financial mindset around spending. And so I got I complete flip-flopped from careless spending into like on a budget, using Mint, I think at the time. Now I use Personal Capital, but I watched my numbers. And so, here I am tell her, I'm going to take all of your life savings. I'm going to take what little about I've had, and I'm going to go buy this piece of property.
Trust me.
It'll work.
And I've never done this
And
before.
I've never done this before, but I've read a lot about it.
Yeah.
I read this book. We get through that. We make the purchase, bought the property off market, like you said, and I'm introducing myself to the tenants, and I'm trying to create an arm's length distance between me and the tenant. Yeah, I'm just a property manager. Oh, I am the owner.
Right.
And so that was good. I mean, it was little bitty 600 square foot, 1 bedroom, 1 bath, 4 units all stacked in there. And one of my good friends from high school, he's a Euless police officer, and he was like, "Dude, you bought that thing? You're crazy." He's like, "I'm on that street all the time. That's a rough street. There's a little Roach Motel just down the street from it. Activity going on." And
So, do you remember what roughly your mortgage was versus the monthly rents?
yes,
To give us some.
rents were at the time $650 a unit. By the time I had sold it, I'd bumped them up to about $825, and I think all in I was paying like $900 all in on that thing. Yeah,
Wait. So, 900 your expenses, and then
I was cash flowing about $1,000 a month.
That's like 100% cash on cash.
Yeah, it was good. I was like, the numbers are amazing. Look at this. She was like, "Okay, I believe you there."
What year is this?
This is 2015.
I mean, maybe those are out there 2025 when we're recording this, but that's really good.
Yeah, it was really good.
That's really good.
So everything I was like, this works. I just gotta keep mailing out letters. I went through I gave myself 6 months to kind of work out the kinks of being a landlord and all that stuff. I was a handyman for a lot of it. I had an HVAC guy and a plumber, and some of the bigger stuff I couldn't handle. But for the most part, if they had a leaky toilet or had something, I was the guy doing it. And so I wanted to stay close to home because I wanted it to be less than a 20-minute drive for me to get there, fix it, and get out of there. But so I was like, okay, the strategy works. So I mailed out another batch of letters about 6 to 9 months later.
Okay.
I get another call back from a guy in Grapevine over behind Baylor Hospital. And so I'm like, cool. And I built my list within a 20-mile radius. So I wasn't mailing out to Dallas. I was only mailing to very select zip codes.
Okay.
When I was being very strategic with it. It was, the absentee landlord list.
What's a rough cost per letter?
Um,
roughly.
All in, I was about $1 after you pay
Okay.
for the list, you pay for the letter, and you get it mailed out. It was about $1 a letter.
So not chump change, but not like you're spending your life savings.
Correct. Yeah.
You
I mean,
you send
I
out
kept
400,
each
500 at a
batch
time or so?
under $750.
Okay.
And so I'd send out a batch, and I'd wait 3 more months if I didn't really get much feedback on it. But at the time, I was tracking it anywhere from 3 to 5% of calls would hit back to me from the letters.
Okay.
So it wasn't terrible, and so it kept me going. So this guy calls me. He was a business owner. He lived in one of the duplexes. He had rented out the other side, and he owned the one across the street, and he rented out both of those. And I was familiar with the area because both my daughters at the time were born at that hospital. So I was like, that's a good little area.
Yeah.
And so he's like, he needed to sell because he'd just gotten divorced, but he wanted to put money back into his trucking business. He's like, but you got to buy both of them. And I was like, both of them? Man, I don't have any. So at the time, I'm in Dallas, and I'm talking with my manager, and my manager at the time is like, man, you're doing this, like you're doing this real estate thing, and I'm like, yeah, I'm gonna see what happens. So he's like, I'll put some money into it if there's a return. So I built out, he was familiar with investing and
Right.
just the concept of investing, not real estate, and so I built out a spreadsheet and kind of gave him some equity into. Basically, look, my plan is I'm going to buy this with an investor loan. I had a good lender that knew what I was trying to do, and then I'm going to cash out refi this in 6 months.
Okay.
He's like, well, how are you going to cash out refi it? And I said, well, I'm buying this at the time. Tax rolls were at like $340, and I bought it for $225. He's like, you got to buy both of them. So I mean, it was a $450,000 purchase for me, 2 duplexes. I got it done. I raised, lending wise, I borrowed money
Yeah.
for the down payment. That wasn't necessarily talked about with my lender, but I had the money, and the money came from my account, and it was seasoned in my bank account.
Hey, season 60 days?
Season 60 days.
Yeah.
So I knew the seasoned rule. And so we get it purchased, and, people are already in there. We're chugging along, 5-month mark hits, and I submit all the docs to get it refied, and they both appraise at like 390. And so at that time, I pulled out 180,000 in cash.
Nice.
And I don't remember exactly what the mortgage payment was after the fact, but I was still cash flow positive.
Still cash
I was
flow.
making about $250 a door, I think. And that was $250, $500, $750. I was making $1,000 between the four.
So you're making $1,000, and now you got some money in your
pocket.
pocket.
I got some money in my pocket. So I recouped a lot of money, and I got my investor paid back. And he got some money in his pocket, and he was like, dude, this is great. You let me know anytime this happens.
So now you're feeling real good.
So now I'm feeling really good.
Yeah.
I haven't lost yet. So I mail out another round of letters. In the meantime, I have applied to work at Hillwood. Hillwood's a Ross Perot company out in Fort Worth. I go on the interview. I get a couple of rounds in, and I'm meeting with the controller for the business. His name's Vishal. And I don't get the job. And I go home, and they gave it to another guy that I'm actually friends with, just in a roundabout way, which we'll get to. And it's just funny how real estate works. But so he calls me about a week later. He's like, hey, man, sorry. I said, oh, it's all good. I'm still trying this real estate thing. And he's like, but I got a lot of money, and I'd like to invest with you. And he was like, I see what Hillwood does. I don't really get the opportunity to he co-invests with them when he can, but he's like, I want to do this on my own, too. I'll invest through you. So
this is the guy that got the job you were interviewing for.
This is the guy that didn't hire me. He was the hiring manager.
Okay, the
so he didn't hire me. He liked me enough. Yeah, I didn't have the real estate. They hired the guy that went to Pepperdine.
Okay.
I can't blame him. He went to Pepperdine. I went to North Texas, so a little different background. And so he's like, but I want to invest with you, so let me know. I was like, actually, I've got these other properties, and that was kind of my interview experience into real estate was that I personally owned property, not to any level that Ross Perot and his company owned, but that was my way in. And so I mailed out some letters, and I got another hit on an older guy that over in Northwestern Hills had a duplex, wanted to sell because he wanted to go buy some land and go deer hunting for the rest of his life.
So you're specifically looking at multifamily.
Only multifamily
is what I hear. From
I liked the ability to have if one door wasn't rented, at least I knew this one would most likely cover my mortgage, and I wasn't going to be upside down on a monthly basis. And so I was just looking for duplexes, triplexes, and fourplexes. And now that's I hear numbers today, and I'm like, golly, I don't know how you do that. On market. So my strategies were always built off market multifamily.
Gotcha.
So,
if I could go back in time to quick tangent, the VA loan, as you know, the smartest veterans I know.
Oh my gosh,
if y'all are watching this, buying multifamily with zero down and living in one unit while you rent out the others. There is no other mortgage product out there in the world that you can buy a multifamily for zero down.
I just sold a property over in Grapevine to a guy about 3 months ago who's doing that same thing. House hacking with a VA loan, and he's like, dude, this is amazing. Yeah, I wish I would have. And he's in his 30, he's 35, 40. And And he's like, I wish I knew about this so much sooner.
Yeah, when I bought my first home, I was 23. I was young.
Yeah.
I was a second lieutenant, but I also had a freaking BMW car,
Lot of
auto
excess money
loan
that you-
because I wanted to be flashy. And I'm like, you idiot! Like if I
Right.
could go back in time, I would have put it in the real.
Yep.
Anyways, sorry to.
No, but
tangent.
exactly.
Yeah.
I mean, that's how I was going about it. And so I got that one, and that at that time that was probably, so that's pushing 2018, and the tenant that, so I fixed it up. It's costing us anywhere from 12 to 15,000 to, repaint the whole thing, new flooring, granite countertops. I made them look good,
Okay.
and then I charged, the theory behind it was I want the most value, the best quality for the best value in the neighborhood. And so looking at the other comps and rentals that were in there, it was all, Formica countertops and basic this and basic that. So I wanted to go a little bit above and beyond and get a flood of tenants, which always worked, and it was. And so, but then I get a tenant in there that in my Grapevine duplex that at the end of the day, they had a cockroach infestation that the exterminator was like, I've been in this business for 25 years. I've never seen one worse. And I was like, oh, I mean, they were on the ceilings, the walls, the doors, and this lady was running a child daycare out of it. They broke their lease, and so that's why they left. But I don't know why they broke their lease, other than I could assume that she couldn't run her business out of my unit any longer with the amount of cockroaches. Then the other guy on the other side, I'm like, I go over to his house and I'm like, hey man, we're doing extermination on this side. Do you not have any cockroaches? He's like, no, we have a lot of cockroaches. I said, why haven't you told me in the year that I've been your landlord? He goes, well, I was afraid that you'd jack our rent up or leave. And I said, that's not what this is.
Yeah.
That's not my role. My role is to make sure. So then we do a house walk and we get into his bathroom, and like the faucet down here and the shower head, there's no tile on any of that area. It all fell apart years ago, and he never told the guy that I bought it from. And so he didn't want to flag it to me in fear that we'd fix it and then raise his rent.
Right.
And so I was like, all right, I'm not dumping more money into this. I got so much equity on the table. So I got with a friend of mine, John Westrom, and put everything on the market.
So this is the ugly side of owning.
Yeah, of owning.
Yeah. I know we talked
get
about a lot about
depreciation,
yeah.
and you get all this cool stuff, and you're like, yeah, man, I own 10 doors, and this truck is paid for by my rentals, and that's all great. But there's also there's good and bad to both sides of it.
And when he talks about
No.
cockroach infested.
No.
And then, I mean, I'm not an insurance expert, but I'm pretty sure like running a business,
Yeah.
childcare
Yeah.
business
Can't do
out
that.
of, pretty sure
Not,
you can't,
not supposed to do
be
that.
doing that.
Not supposed to do that. So once all that kind of came through, and then that duplex in Northampton Hills that I just bought, she wouldn't let us in. She kept giving us excuses, and because we had some showings scheduled, and every last minute canceled. So then it was hurting me trying to sell the property. Well, it turned out she had a pit bull in there that had just destroyed a room.
You got a lot of strikes going on in this
Yeah,
place.
so we finally get in there, and she's like calling the police on us, and like, sorry, this is. So the police finally get us in, and we get it sold for, I think, right what I was asking for. I think I bought that one for $325 and sold it for like $390, and so and even at that's when I kind of saw the market. The values of what I was having to pay off market versus what we're on market were starting to tighten.
So what year is this roughly?
This is 2018.
Okay.
Yeah, and I was like, market's changing. I got to get out. If I would have held on for a little bit longer through COVID, oh my God, it would have been nuts. But I dumped everything, and I was looking for my next thing. So I was sitting on, I don't know, $400,000 in cash.
So I mean, hold on. Let's just pause there because not too long ago in the story, you were asking your wife for her life savings.
Life savings, yeah.
Not ever even going down this path.
Correct.
And then just a few years later,
yeah, real estate can make it happen really
you're
quickly.
on hundreds of thousands of dollars of cash. Yeah. Now that's not a guarantee by any stretch of the means.
That is not a guarantee.
But that's proof that the college degree doesn't necessarily matter, right?
Nope.
Like it's the self-education that you started with Bigger Pockets, and then the networking, and then obviously you got to have drive and all that. But just it goes to show, you don't have to go to college for this degree, and then this is going to be determined like your life at like.
It just doesn't. I mean, did it help me get my foot in the door at my first job? Sure. Then where I took it from there was up to me.
Exactly. Exactly.
And so, for 3 years, I didn't know what real estate was. I didn't know that there was investing into that area. My brain was in the stock market because that was my role. I was
Right.
I was in wealth advisory, and we used common ways of investing, which were building portfolios on ETFs and picking stocks.
Yeah, less risky.
Less
Yeah,
risky,
yeah.
more liquid,
Diversified, like
diversified, all that normal stuff
yep.
that I had just ingrained in myself, which I still use today. I invest with my HSA, I invest with my 401k.
Yeah,
I've
that
got
still
a solo,
serves a role.
still
Yeah.
serves a role. So I'm not saying kick it out, but for me, real estate was what I thought was more tangible, and I could put my hands on and wrap my brain around. Okay, we can do this. I can physically add value to this. I can't add value to Dell. I can look at Dell
Right.
and hopefully they're doing the right things to add value to them, and I'm going to be a part of it. But I can, if I buy right and if I do the things right, I can add value day one.
And what's that crazy statistic that you hear that X amount of percentage of millionaires, multimillionaires that made it through real estate? It's something crazy.
A huge amount of people
80 or 90%.
all based on, it just comes from real estate.
Yeah.
It just does. Or some type of business owner, an entrepreneur
Yeah.
that has most likely lost everything, and but you never saw that part of it. And so I'm sitting on a pile of cash, and I'm looking into other ways in real estate, and I'm looking for a little bit more passive. I don't want to own property, so I get into notes, and I start buying. I run into a guy listen to a podcast. So I'm listening to a ton of podcasts at this point, trying to figure out my path next. And a guy is doing distressed mortgages, and he's buying the paper. And so I'm like, okay, I like that. You can try to either get them to either going to foreclose, you're either going to get them to modify, or the property is you're going to sell the distressed paper at a little bit more of a price than what you bought it at. And so I go down to Austin. I spent $10,000 on a course, on a 3-day intense course, and my wife's like, "What are you doing? You can't." I was like, "What are you talking about? I'm winning. We're up like hundreds of thousands of dollars, and you're mad that I want to go spend $9,000." And so I had to sell that to her that, hey, I'm going to go to Austin for 3 days. I'm going to learn from this guy on how to buy notes.
I mean, that's a hefty lump sum.
And I had never spent that much on education other than college.
Right.
And so she was just trying to wrap her head around it, and I was like, "No, this is it. This will get me to the next stop." And so I get down there, and I'm an action taker. So all I'm looking for when I go to pay for education it's like a spark. I can jump 2 years ahead of everybody.
Yeah,
instead of trying to figure it out myself.
You're paying to expedite your learning curve.
All I'm trying to do is expedite
That's all you're doing.
my path. And so it expedited it, and I leave there with a company name, and I've already filed it with the Texas Secretary of State, and I'm rolling. And so I come up with Sage Notes. My previous business that I was owning the real estate was Sage Equities. Sage only because my first house we were planning some stuff, and Sage was something. I was like, it smells good, looks good. Sage sounds homey. Sage Equities did not sound homey at all.
And what's the quick Cliff Notes version for the people that are watching and listening that don't understand? Like, wait a minute, you're buying a note? But is there another company like servicing the more? Like
there is.
So you don't how does that work? Give us the quick Cliff Notes on that.
The short and sweet of it is, you're getting a loan for $150,000 from Wells Fargo. Most of the banks, the big banks, or any of the big originators, are taking that paper and immediately selling it off to either the government or a private individual.
Okay.
And so generally those are trading or selling for the same roundabout value that they underwrote it for. $150,000, I'll sell it to you for $147, $148, maybe even a premium based on the borrower's qualifications.
Right.
And so I wasn't interested in the grade A paper. I wanted like the grade F. I wanted the bad paper. Still a good property, so you still have to do your due diligence and understanding. But I was doing it on, I was so focused on a 20-mile radius of Dallas-Fort Worth or my home in Bedford that his was like, no, this is national. You got to buy loans everywhere. I was like, everywhere. The paper can be easily traded as long as it's paying. It's a performing loan, a performing note. As long as that individual is making their payments, great. You can buy the paper at probably about what's owed on it. So over the course of 10 years, let's say you owe $110,000 on it, that paper is going to buy paper about.
And you don't have to be like an accredited investor or like Joe or Susie or whoever's watching this can buy notes.
You can go buy paper.
Buy paper. People watching this can go do this.
Paperstack.com.
Okay.
Paper and stack is stac.com. Two guys out of North Carolina, I think, genius around what they did, but it's a trading platform for notes. Good notes, bad notes, reperforming notes.
So you're doing like arbitrage, but
Correct. With paper.
with paper and with
So
notes. Okay.
yeah, so my job was to I started making connections, and now I'm doing not cold mail. I'm doing cold calls. So now I'm calling up banks, regional banks. I was using a website called distressedpro.com.
Okay.
Distress Pro is a interesting thing about the banks is they all have to file their FDIC reporting every quarter. So that's identifying everything on their loan portfolio, and among other things, their good notes and their bad notes, an automobile, credit card, home, and a few other things, non-secured. And so this guy put in some software that would aggregate all this data from the FDIC that's access to everybody, and then put it in a dashboard for you to go filter through banks and look for crappy loans.
Dang.
Or good loans.
Yeah.
And so I started, and then the contact people at those banks. And so I started building up, okay, I want to buy loans in this state, this state, this state. I was looking for, ease of foreclosure. So in Texas, we've got, much more bank-friendly laws to foreclose on versus somebody in California. Trying to foreclose on somebody in California is going to take a little bit longer.
Right.
So I narrowed down, okay, these are the people I want to call. I had some cash, like I said, but then I went back to my two buddies, the Vishal, the guy that interviewed me. I said, hey, I've got this idea. I'm going to do this. I went back to my manager, Todd, and I was like, hey, can you put in some money? And then, and some friends of mine that I've been friends since 8th grade. And they're like, we want to invest with you too. So I'm like, man, okay. So we put together $200,000. I put in a little bit of my money, and my whole thing was OPM, other people's money. Still be a good steward with it,
right.
But I wanted to leverage other people's money.
So you're basically starting your own syndication.
Correct.
At this point.
Yeah. So I was putting in low level amounts of capital and going out and buying onesie-twosie loans, just trying to get my feet wet. So I bought a loan out in Augusta, Georgia, and so I was talking with either banks or a hedge fund that was dumping bad debt. And so this debt was all pre-2007, 2006 crisis. So most of these loans that had originated, giving anybody a loan, and now they can't afford it, and it's been delinquent for, most of my loans were delinquent for 5 years or more. The banks just weren't foreclosing on them.
And you're buying these up.
Mm-hmm.
So how does that work when you go to somebody like, hey, I need a lot of money, and we're going to buy some notes of people that I haven't been paying on them for 5 years, but trust me, we're going to make some money on it.
We're going to make some money on it.
How does that conversation even happen?
So I broke it down on a very small scale of one note. And so the Augusta, Georgia one was the first one that we did. It was a nice home just outside of the golf course. And the funny thing was I was trying to get that one too, because if I had a address in Augusta, I could go to the tournament.
Yeah.
Or I get access to the tournament because I was big into golf then, not so much anymore with kids. But I was selling it to him. I was like, look, man, we're going to pay, I think that note was like $42,500 is what was owed. Now, I bought the loan for $3,700. So I bought somebody owing me $42,500. Mm-hmm. Most likely not going to collect that. But I paid $3,700 for the right to be paid $42,500.
Really? Okay.
And so I've got this paper, so there's, the loan, I'm looking at the loan origination docs, the collateral file for it. I do a title search on it. So there's a couple of companies out there that'll do that. Bulletproof Title is a book that I read, written by an attorney that does specifically for this and how to follow chains of title to make sure you're not getting screwed. Mm-hmm. When you are buying notes. And so I was like, look, man, how can we get hurt? It's $3,700. And let's say, and the job was to get them to modify. They were still occupying the property. They'd make a payment and then not. So, but over the course of 5 years, they hadn't paid much.
But you don't own the property.
No, you do not own the property. Yeah. I own the right to it.
Right.
If they were able to foreclose on them, but I got them to modify.
Okay.
So, really what you want to do is you want to get the note reperforming. And so after about 12 months of seasoned payments, you can turn around and sell the loan for 80 cents on the dollar. And so I eventually, at about month 18, we held on to it because it's good cash flow. But I turned around and sold it for like $35,000, and I bought it for, $3,500? So, you're not
So
huge margin.
what's the easy, like 1,000%?
Yeah, the 1,000+%
rate of return on that?
You know, not great money in terms of, okay, cool, you made 30,000. I could go do that with something else. I was like, yeah, but I didn't. It cost me nothing to do it.
But this is not your full-time job.
No.
You're doing this on the side.
Yeah, I'm still working. At this time, I've left the Dallas place and I've worked for Caliber Collision. So I was in their finance department.
Okay.
Not doing financing collision repair, but in the finance department doing FP&A.
Okay, so you have a stable W-2 job.
Yeah, I'm making $100,000.
Yeah, great money, and you're doing this on the side, making
making
great money too.
Better money.
I
was making more money over there than I was at my job.
But so, are you killing yourself? Like, do you have children at this time?
So,
like, talk to me about that aspect.
My first daughter was born in 2014. My second daughter was born in 2016. I'm up. I usually so I would come home 5 o'clock, spend the evening with everybody. I'd go to the gym at 9 o'clock when they went down. And then I get home. I'm still wired on pre-workout, and it's 11 o'clock, and then that's when I did all my online stuff.
Dude.
And so 2 a.m. was about my bedtime for most, and I did that for 8 years.
We could not be on complete opposite schedules.
Yeah. Now I wake up. Yeah. Well, my wife would beg to differ right now, spring break and everything. But now I'm getting up usually around 5 a.m. and I get to the gym, and I'm off I try to be off work at 3:30.
Nice.
I've completely flipped it back.
Okay.
Yeah. But when you're working a full-time job, you know, you just don't, you try to get away from at the office and take a phone call or whatever. But I mean, for the most part, yeah, I mean, I had 2 kids, and the third one was on the way in 2020. And so, you know, but you know, that caused an issue at home though. You know, I wasn't present. It caused, you know, just arguments that would fester and boil up, and it's hard.
There's a cost.
There's a cost. It's not free.
Yeah.
So I don't want to fool anybody thinking that, you know, because the joke was always, not a joke, but it's like, man, I wish I were in your shoes. Dude, you have no idea.
Yeah. They don't. It's not condescending. You know, they don't mean, they're like, oh, must be nice.
Right.
You know,
no.
I
These
get
are
that
close
sometimes.
friends of mine. Like, must be nice. We're like,
dude.
yeah, there are some nice parts to it. No doubt about it. But if you really want to know, I'll be happy to share with him. Like, yeah, sure. So then they're like, oh, dude, I had no idea. Yeah. I know. It's not something that I hide, but it's also not something that I wear a T-shirt that says I've got $400,000 of credit card debt right now.
Oh my gosh. Okay, well, let's get to this.
We'll get to that. So right now I'm winning.
Yeah.
I'm in the notes
you're
business.
Winning. This is 2018, 2019?
Yeah, this is 2019.
Okay. Because I haven't met you yet. I think I met you like more like the COVID.
Yeah, right at 2020, 2021.
Yeah. Okay.
So 2019, I'm buying loans, onesie twosies, and then I run into him. It's all virtual, but I get in contact with a guy at PennyMac. So I buy a loan from PennyMac, and it's a condo out in Asheville, North Carolina.
Okay.
This thing was cool. The guy that had originally developed the building, he had gone bankrupt, and he hadn't paid in 10 years. The bank just didn't want to foreclose on him.
How in the world?
I don't know. So, well, in this case, his loan docs were lost in the shuffle. His loan was sold 4 or 5 times by the time it got to me.
So he's still living in the property.
No. It was a rental. It was at a before Airbnb was really around. It was a condo that you could go rent. Like if you go to Colorado,
right,
and you rent out a rental place that somebody owns it. It's not like a timeshare. They do own it, but they rent it out with the property management company out there locally.
Gotcha.
So it was that type of situation. They were still renting it, but all the money was going back to the bank that he owed. So he had owed $250,000, and I bought that loan for $170,000, and the whole thing was like, and I couldn't get access to it, so I was paying somebody to try to like. It was on the 4th floor, so I was trying to get like my in with the cleaners to see if they could like open the door and just get a few photos. The guy had like taken the oven and kind of damaged some walls and stuff, beat up. But I mean, at the end of the day, it was a $250,000 condo, and so I bought the guy from PennyMac's like, he's even talking to me. How are you doing this, man? I want to be you. I'm like, okay, like this guy's been working for PennyMac for 20 years as a distressed loan trader, dumping their bigger portfolios,
right?
You know, thousands of loans. That are on the good side, but he was happened to be
PennyMac's one of the biggest loan servicers in the country. Yeah.
So I'm talking with a guy at PennyMac, and which was just cool in itself that I'd gone through that level within 6 to 8 months.
Right.
And so we get it, and it's going through the foreclosure process as we're buying it. It's just the bank was just done with it. They just wanted to get their cash and move on. And so I put it on the market with a local agent, sold it for like $260,000, and I was like, okay, there's some money. That was cool. Um, and then my next deal came after I'd put all this money together from some friends, and we bought $2.2 million worth of distressed debt for 180,000. Loans all over the country. So
Okay.
some stuff here in Texas. Most of the stuff was in the Midwest.
Is that common to be when you're doing this? Because that's roughly a 10 or 15% is what I just heard you say.
Yeah.
Like you spent.
That one was, if I remember the deal, it was like 5 cents on the dollar.
Okay.
Yeah, it
Is
was
that
even
that's
cheaper.
a pretty
Yeah, that's deep. That's where
Okay.
you want to be at. If
Okay.
you're gonna buy distressed debt, you want to be under 10 cents.
And this is y'all's biggest purchase to date.
Correct.
With you and your investors. Okay.
Doing this note thing.
Doing this note thing.
And so we're getting it, and this is middle of 2019, not knowing COVID's coming, and all the moratoriums on foreclosures, because that was the main exit here. We were going to foreclose on the houses. I had paid for a couple of due diligence companies to do the title work, to get physical pictures of the property. Some of the homes were gone. It was just land. I was buying a lot.
Okay.
But on average, my average deal was $2,200, and if I could sell the lot for $6,000, that's good money.
Yeah, great money.
That's great money. And so I was stuff in Minnesota, stuff in Michigan, Iowa, Philadelphia, Oklahoma, Texas, 63 loans in total, and I just started working through them. So I'm calling this guy. I'm sending letters trying to get them to either reperform, let me move forward with a foreclosure, or modify the loan.
And you're still working your W-2 at this time.
Still working my W-2. So at that point, I was on the phone a lot. And my boss, who's also in real estate and actually in senior living, he does residential care homes, which actually got me into this business that I'm in today. But so I'm on the phone a lot and trying to get through all this, and we're trying to make $500,000 at the end of this. And so everybody's trying to double their money, and then I didn't put next to nothing in it.
Right.
That was my role, using OPM and the knowledge of buying notes. And then COVID hits. By that time, I'd recovered all the capital, so I'd gotten back everybody's money. So now we were just playing with house money.
House money at that
house
point.
money at this point. So, but COVID hits, and we more and more start trickling out, especially from the more democratic states of, hey, you're not foreclosing on anybody regardless of circumstances.
Right.
And so I'm trying to call local authorities, like, what are you talking about? Like, this, they haven't paid in 8 years. Mm-hmm. This isn't a COVID-induced non-payment.
Right. They were already not paying.
They were already not paying.
Yeah.
And so it halted everything. I found PaperStack and posted all my loans on there. And a guy that I'd kind of networked with out of Florida, he ended up buying the rest of them. I think it was like 30 loans in total, 40 loans in total. He bought the rest, and we made about, I think, around 150, 200,000 on that. So everybody made good money on it. It just wasn't nearly what we were forecasting.
Right.
Is what it is.
Which it goes that way.
Yeah, it goes that way.
It goes that way.
And so
at least you're positive.
we're still positive. We're still good. And so I'm out of the note business now. This is middle of COVID. So this is May of 2020, and we land in Broken Bow. So two couples and their kids and our kids. We go rent a cabin.
Mm-hmm.
We'd been there previously, but totally different than what it is today. And we get up there, and we're in this cabin, and there's a couple of for sale signs up, and knowing what we paid for the rental, and I'm like, man, these numbers look good.
Yeah.
And so I go home and putting my spreadsheet together on it, and I end up calling a local agent there, Paula Beauchamp, and I'm like, hey, I'm looking into some property up there, and the numbers seem to work pretty good. She's like, yeah. So I've got a couple off market that I'm like, ooh, I like off market.
Yeah, you got my attention.
Yeah. So I'm in Broken Bow, and about 3 months later, I bought a cabin that was already existing. The guy was a pilot. And so it's just funny how stories work together. He was in a pilot during COVID. He's not working. He needed the money. So he sells, and I bought that cabin fully furnished for $445.
Okay. With the intention of being a short-term rental.
Short-term
You're
rental.
Airbnb.
Airbnb, yeah.
VRBO,
I was not staying in it. I mean, we didn't stay in it until about 6 months later.
Okay.
So I bought it sight unseen.
Which is the craze if you go back in time, especially here in DFW, because people, because of COVID, are not flying.
We're not flying. Nobody's flying.
Where can I drive within 2 hours,
Correct.
3 hours of the Metroplex?
And this is right as, man, this Airbnb thing could be huge.
Yep.
And so we bought the property, and then within 3 weeks, I'm like, I need another one. Sitting on all this cash. I was burning a hole in my pocket, good or bad.
Yeah.
And so I call her back up. She's like, "Hey, this builder, he just bought a lot, and he's building a little 1-bedroom cabin." I said, "All right, I like the smaller ones, so it's more spontaneous bookings."
Yep.
So that was, I had some rationale about what I was going through. But his little 1-bedroom, fully furnished for $375. I was like, can't go wrong there. And they were doing $60,000 to $70,000 in rental income a year. So I mean, the numbers were already paying for itself. I wasn't expecting anything more than that.
Yeah.
I was just going to keep it and let it do what it's doing. So I get that one. We get built. In the middle of that, I'm talking with the builder, and we're having lunch and we're checking up on the property. By the time I've quit my job at Caliber, because this building thing is taking off, and I'm starting to compound.
Okay.
And
so you're going all in.
I'm all in at this point.
And
so
the wife behind you?
Yeah.
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 I mean, you got a pretty good track record by now.
Her biggest thing was insurance. So she's a diabetic.
Okay.
And been diabetic since she was 12. And so her biggest thing was insurance, and having to go one way. I was like, well, we'll get Cobra. We'll keep your insurance for at least the next 18 months, and I'll figure it out in between there.
Obviously more expensive, but we'll keep
more
it.
expensive. Yeah, it was $1,800 a month versus what I was paying of $700.
Yeah.
I got to pay the employer's portion because I was the employer now.
Yeah.
And so she was behind me, so we jump into that, and my goal at that point. So I had these 2 rentals. They're bringing in, as COVID starts progressing, they're bringing in more and more money.
Right.
Hand over fist. I was like, oh my gosh, we're making good money here. I was like, this can't be sustainable, but I think there's a way we can jump in and make some quick money and do the construction side of it. So I'm talking with the builder, and he's like, look, man, you seem to be like a pretty smart guy. What if we partner it up? Okay, well, what does that look like? He's like, well, you go get the land, you get financing for the construction side of it, and I'll build, and we'll split profits 50-50. I'm like, all right, well, what do the numbers look like? So at that time, this is 2021, 2020, and you could build a cabin for at least a 1-bedroom my size that I was looking at for 160, 170,000. You're buying the land for about 70, and you're selling them for around 400.
Good margins.
Like, that's great margins.
That's great margins.
We can do that all day long. So I hit the ground running. I go buy 11 lots. I got financing on all of it, because we already had plans ready, and the banks were financing the construction based on plans.
Are these conventional financings? Are they DSCR? Are they?
These were mainly because I already had the equity in the lot. I had paid cash for them. That I was using that as my down payment.
Okay.
So they saw that piece.
Yeah. Okay.
And at that time, you could sell a cabin off plans. So a lot of times we already had a contract paired up with the lot and the plans.
Damn.
So that's how fast things were moving. So a development would open up with 100+ lots, and it was like a free for all. I mean, people grabbing 5, 10, 20 lots at a time, and then you get the 1s and 2s where I just want that lot. It's beautiful. It's for my family.
This is happening. So this is not even probably being talked about too much on the internet. Or
no.
This is just happening so quickly.
This just happened very quickly. I mean, over the course of 6 to 8 months of me being, involved in what Broken Bow's real estate market was, that's how fast it evolved.
And I don't want to say you dumb lucked into it, but it's because because of a vacation that y'all took,
because
and your
of a vacation.
boots on the ground. You're like, dude, look around. Like, look,
right.
Like, there's some opportunity
there's
here.
luck involved for sure. There's no doubt.
Okay.
Now it takes action to figure out if that luck's going to do anything for you. So we get into it, and I buy a bunch of lots, and I get a bunch of financing ready, and then it just comes to a grinding halt. And like 3 months go by. I'm like, hey man, and I'm going up there every week. And
the construction.
Yeah.
Okay.
So my builder's not building. And I'm like, man, what's going on? And I'm not going to throw names and anything out there, but I'm like, okay, this is odd. I'm like, man, I've raised a lot of money. I've raised close to like $700,000 from a couple of other guys that raised money from family members. And I mean, there was a lot of money being put into it. So I had a lot of pressure on me to perform. And so we get 4 months in, 5 months in, and the lot got cleared. The form boards went up for the foundation. But like, this is not, like, you told me 6 months in we'd be in and out of these. Because that's what, I mean, he built my cabin. I had a track record with him personally.
Yeah.
He was building cabins in 6 to 8 months or less. And beautiful ones. Did a damn good job. And then here I am 4 months in, and I don't have anything.
On multiple
lots with a couple of trees knocked down.
So what's happening?
So I find out that he's not paying his subcontractors.
Yeah.
He's not paying his subs. and his subs refused to work for him, rightfully so. And so I'm now calling him like, hey man, this isn't gonna work. Like we over the phone amicably agree, hey, lot 107, we're not doing that one together anymore. Lot 102, we're not doing that one together. Hey, the one up in Pine Hills, we're not doing that one together. Okay, slowly but surely, they're all off the table, and I'm now the builder. I'm now the guy that has plans, has a bunch of lots, has a bunch of construction loans behind me, and I need to go find a GC that's up there in the area. And so I'm asking around. I'm talking with a couple. At that point, it was hard to find work, hard to find guys that were willing to work for you.
Yeah,
because they already had a plethora of work working for other builders.
And this is combined, probably compounded with just the stuff that came with COVID, as far as labor shortages, material shortages,
high price materials. Everything.
We're not even talking about broken bow infrastructure. We're not even talking about that.
Yeah.
So you got some challenges ahead.
There's a lot of things. There's a lot of headwinds going into that.
Yeah.
But with how fast they seemed to be moving when I was getting into it, I was like, yeah, this is a no-brainer. And then so I become the builder, and it was a shit show. It was bad. And so we're working through it. I've hired a general contractor. Turned out he was just stealing money and materials off job sites. Ended up he had a theft problem in the past at other employers. And so, fired him after I've already lost a few $100,000 on that in construction loans. So I'm taking draws from the bank to funnel this. And, I'm trying to get up there and watch progress. But, part of his fee, like, how did you not see it going? Well, part of his fee was just a $5,000 a month per cabin as he was GCing them. So a decent chunk of the money was nothing you could track to see progress.
Just his management fee.
It's just a management
project
fee.
management
His project management fee. And so I had, at the time, 8 going out, so that's $40,000 a month. That adds up real quick.
So this is the first part during this conversation where I've heard this is a pretty big L you're taking.
Yes. Yeah. And it's spiraling quickly. The money's still there. We just need to get them sold. We had contracts on most of them, so it's like, dude, we just got to get them done. And I was throwing out bonuses, not yet, but like, if you finish this in the next 3 months, I'll pay you a $20,000 bonus. At least I'll make some money and save and kick other people back.
Yeah.
Well, some went that way, others did not. So he ended up getting fired, and I hired another guy who was one of the subs on the job that, I'm having to promote. To become my boots on the ground while I'm there, and that went a lot better. So we started picking up traction and getting things done. Then we took on some challenging builds. We took on one that was 30 feet off the ground on the side of a mountain. Weather delays and everything that just compounds into, essentially, I'd gotten to a point where the 3 or 4 that I had left that were either 90% done or just about to get started had contracts on them, but I'd run out of most of the money from the construction loan. So now I'm at the point just swiping cards. I'm opening up chase cards because I'm not walking away. My integrity was I'm not walking away. I'm not doing that. At that time I had opened up our candy store in Broken Bow. So I've got Sasquatch's Candy Den, pretty popular spot up there now.
Okay.
Over the course of 3 years.
This is when I met you.
Okay. So I've got a reputation.
So you got residential and commercial stuff going on in Broken Bow.
We had bought, me and my business partner had bought 5 acres for $1,050,000, and we're developing this concept that we call the Yard Under the Pines. And so it's the candy store. It's about 10,000 square foot of artificial turf.
Yeah.
Naaman's Barbecue, a gift shop, and the Cave VR, which is a virtual reality business. That was all in our head. It wasn't done yet. It was still, we'd present it to the bank. We'd present it to 4 banks that all said no. We finally got a yes. And I'm still in the middle of all my other.
So you kind of went all in.
Oh yeah,
on Broken Bow.
I went all in.
You're 7 figures worth of stuff going on.
We're a lot in.
And now you're opening credit cards just to
get these cabins built so that I can get everything, and it'll pay the cards off.
Does your wife know the extremity of this?
Yeah.
Okay.
Yeah. I mean it. Yeah. It was taking a huge toll on me.
Okay.
Yeah.
So
that was rough.
What comes next?
So in the middle of that, I'm then sued by the builder. I get a lawsuit.
The original builder?
Mm-hmm.
Okay.
because I was for fraud. I get sued for fraud, and I'm like, fraud. So I call my lawyer, and I'm like, man, what is this suit? He's like, well, he's suing you because of breach of contract. I was like, my dumbass never had an official contract put together, and it ended up saving me that we didn't have one, but it also hurt me because it just drug out.
Okay. Yeah,
And
how
the
can
fraud,
you breach something that it's not technically there?
correct.
Yeah, okay.
And then, but the real substance of the suit was for fraud, because I was supposed to substantially grow his business. Well, you were supposed to substantially grow mine too. I thought it was a reciprocal business here.
Okay, so he got with some lawyer that talked him into suing you.
Yep. And eventually, what I gathered was, again, this is the builder that wasn't paying his subs, where he had run out of money, and so he was looking for a way to get some cash. That's just my estimate. I'd never confirmed it, but it's just kind of what I put together given the circumstances.
Can you say what the outcome of this?
Man, unfortunately, he committed suicide.
The builder.
Mm-hmm. And I got that news, and I'm like, what? And so I'm like, I'm in the middle of it too, and I'm like, I understand, I get it, because I'm in the hole.
Yeah.
And he commits suicide, and I'm just like, what the fuck? Are you serious? And then at that point, there's more lawsuits that are getting tacked on to those to the family for breach of contract because they're not finishing the cabins that they signed up for, and he's just the family's just trying to figure it all out, and then eventually the suit got dropped.
Okay.
So it cost me $20,000 to defend myself. It's free to sue somebody. The money costs when you have to defend yourself, and I couldn't believe it. I was like, what do you mean, man? What are you talking about? Wouldn't take my phone calls, nothing, and so I was at a pretty dark place, just business, personal, money, finances, and everything. And I'm in the middle of building my own home in Colleyville. So I bought a lot. I'm building a house, $1 million home in Colleyville. Because things just happen.
Yeah.
So now I'm like, okay, so.
So you're in you were way up top.
Oh yeah.
And now you're literally about as low as you can go.
I'm running that Facebook group page, and twofold: get people together, like-minded, share numbers. I love that. Kind of the bigger pockets thing, but more niche into
more
broken
niche
bow.
and
And so that's what I was doing. What turned out to be just a hassle to manage, the 4,000 people that were in it, the different opinions and everything. Like, oh, you're the moderator. I'm like, no, I'm not. I'm just the organizer.
Yeah.
I just do it together. And so I'm slowly I'm off that because, it just became a place to bash people.
Yeah. And that's social media.
It's just the social media aspect of it. And it's still a place, it's still a running group, and it serves a purpose. It became more than what I had envisioned it to be, and so I kind of let that go and do its thing with a new moderator or a new owner of the group. But that was over the course of 2.5 years. It really spiraled out of control, and I got the last cabin sold, and then we had one that we were going to sell, but they had backed out, just given the market and rentals weren't doing what they were doing. And it was my biggest cabin to date. So now I've got a 5,000 square foot cabin that I am trying to figure out, okay, we're going to put this back on the market. We're going to just finish it up and get it rented. So we furnish it. We get it rented. I don't even have enough money to pay for all the furnishings to get it rented.
Yeah, because what happened to the commercial stuff?
So commercial stuff's still chugging along. It's still going along.
And that's doing okay?
That's doing okay. So
thankfully.
that was a saving grace. That candy store is God's blessing to what.
Is it still going on?
Yeah. It's still going. We sell about $1 million a year in candy. So it is I was living off the distributions from that.
Okay.
Me and my partner, he was like, look, man, I'm doing my real estate thing. He's a broker, and so he's got listings and he's doing all his normal stuff.
Right.
And so he's allowing me to siphon off more money than what equally 50-50 distributions should be.
Oh man.
To kind of keep me afloat.
Okay.
And so the commercial thing's doing its thing. We're finally it was late last year that the other building got finished out, and so all the tenants moved in, and it's paying rent. But even then, right now, the rent isn't enough to. We're about $2,000 underwater every month on it. That it's just,
Even with all that?
yeah, even with all that, it just is what it is because it was so far over budget.
Yeah.
We get into the middle of it and we get the septic, commercial septic plan for the install, and I had budgeted about $150,000 for the septic. My rationale was each little cabin cost me about 10.5. This is this square footage, so I kind of broke the math down that way. Nobody could give me a real quote over the phone or even in person, and so I just came up with my own number. Well, that septic bill estimate came in at $325,000. And then this thing came in, $50,000 over budget. And this thing was $100,000 over budget. The cost just exploded on everything. That COVID. I mean, it just kind of is what it was.
Well, and just in general, I think this is a good time to give a shout out or plug to any small business, retail.
If you made it,
shop. But I mean, it just shows you. In this example, you're selling $1 million worth of candy a year, and still cash flow negative.
Yeah.
It shows you how hard it is for small business to compete against some of the larger, the Amazons or whoever. So if you're listening to this, give the small business this weekend, maybe shop at the
shop local, shop small.
Local, shop small rather than just ordering online. I get it's convenient, but dude,
yeah, it's easy to pull up Amazon and have it tomorrow.
Yeah,
or have it on your doorstep at 5 o'clock tonight.
Yeah,
I do it all the time.
Yeah,
but when you've got a chance, stop in at a small store because their margins aren't as big as you think they are. And they're not going home to a $1 million home.
Yeah.
Now I am, but I've got other things going on. So I don't mean to to sound like a dick about it, but I did it because I had a bunch of other stuff that I thought would be promising. Well, it didn't, and now I've got a bunch of debt.
But you've also had hundreds of thousands of dollars on credit cards,
on credit cards that I still have on.
See,
that I'm paying $8,500 a month in minimum payment on credit cards.
All from the broken bow.
All from the broken bow experience.
Okay.
Yeah.
See, people don't see that, especially in the day and age of social media where you can live through whatever lens you want to live through and show people whatever you want to show. I want to show them my $1 million home.
Right.
I want to show them my nice car, but I'm not going to show them my $200,000-$300,000 credit card bill.
I drive a 2016 Nissan Titan that's paid off, check engine lights on.
Oh, no.
It is what it is. I've had to replace the rear axle. Now I need to go in for some coolant leak.
Yeah.
It's not all just because you see the one thing doesn't mean it kind of masks and can hide some other things. So, but I'm very open with it. My friends know what I've gone through and what I am going through. But going through that, I never would have started the business that I'm in today, which is called Sage Senior Support.
Okay.
And so this is 2022, 23. This is 2023, December 2022, going into 2023. And I'm like, I got to get back to what got me successful.
So before you get into Sage Senior Support, at this time, with all the turmoil and the hardship, the mental, the physical, emotional, at any point, did you think about just throwing in the towel and giving up and saying,
no.
I'm going back to W-2 corporate America life? Or did
I
you
did last year when things got rough. I mean, it's always crossed my mind.
Okay.
But once you get a taste of working for yourself and being successul, it's really hard to go back.
I hear you. I was really before what I do now. I was in oil and gas, and before that and so people ask me, they're like, "Could you ever go back?"
Yeah.
I'm like, no, I couldn't.
I could never go back.
Even though my job now is way more. It's a different type of stress.
It's
obviously, going to combat in Iraq, that's a stress. But I tell you what, the mortgage industry is more stressful than that.
I don't know how you did it the last year and a half.
It's wild. I know it sounds weird,
but
saying
you can
that.
say the same thing about what I was doing too. It's, it created. I think what it really did is I've always had it in me. It just brought it out.
Yeah.
It was either sink or swim, because now I had all this. Had I not had a bunch of debt, had I not had a home that I have a $3,900 mortgage payment plus taxes and insurance,
in a family
of 3 girls that play club soccer and all this stuff that frankly you don't need, but also I worked damn hard to get it, so I don't want to also give it up. Part of me was like, why don't we just sell it? And that crossed our mind multiple times over the course of the last year and a half, 2 years of just sell the house. I'm like, no, I fought too hard. I will sell my way out of this. And so I was trying to think of where I came across this guy that was selling this program. But again, an
So you go back to your
education.
roots,
So I go
right?
back
You're
to my
like,
roots.
I'm going to
I'm gonna
pay
get some education.
I'm going to pay for education, and I'm going to expedite my learning curve.
While I'm in a bunch of debt, I'm going to go swipe a card for more debt.
Well, that's what you know.
Yeah,
Yeah,
that's what I
yeah,
know.
it's what you know.
And so I fly out to St. Louis and I learn about this way of marketing real estate in the senior living industry. And so what in reality what it is buying homes, fixing them up, and reselling them. That's what I knew. That's what
Yeah.
kind of what I was doing with on the side of the rentals. I was doing a few fix and flips with a friend of mine. So I knew that it was local. Gave me a little PTSD when thinking about construction and contractors, but I was like, okay, I like this. It's a growing part of the population, the baby boomers, and how to position yourself in that niche. And so, really, what my job today is I guide families through the transition of a loved one that is in a home and going into some form of assisted living or long-term care.
Okay.
And so what comes along with that transition is the emotional side, the finances, the physical move, and then what are we doing with the house and all this stuff. So, a lot of times I get chalked up to just an investor. You're just taking advantage of the situation. You're lowballing grandma, but I'm not.
Right.
I rarely do I ever meet with a senior themselves. I'm meeting with their decision maker, their
Children,
daughter, their
yeah.
son, their uncle, whoever that's really the one making the decision. And so I've built this business based off of when thinking back to my wife's experience and her in-law or my in-laws' experience with moving their grandmother 3 times in assisted living into different levels of care. Their grandfather with Alzheimer's and transitioning from trying to get VA benefits. He served in the Korean War, and eventually with Alzheimer's and getting placed around and some aggression with that disease, and seeing just the toll on what it took them to just facilitate all this stuff of just trying to get them in the right place.
Right.
They had them living at home at one point. That didn't work out. That's tough with your mom moving back in with you who's 82 and you're in your 60s or 50s at the time. So how do you do that? And so we ended up buying their home. This was their house over in Bedford back in 2018, 2019. And we bought their home to facilitate the proceeds that could, help pay for care and things like that. And so I built that business around my story, and now here more recent with my mom's, with my grandparents, and grandmother passed away over the summer of last year, and then helping my grandfather my mom navigate what this looks like. And so, yeah, I mean, it's just been 3 years of networking and putting myself out there and doing things that I would have never done had I not gone through what I'd been through. So everything that I've never been closer to God either. So my relationship, and people can laugh or your Bible beater. It's my testimony. I was riding high all the way through 18, 19, 20, and I'm like, God, I can do no wrong. This is amazing. You've blessed me so much.
Literally on top of the world. Yeah.
You've blessed me so much. And then I get in the middle of that, and I'm like on my knees yelling, why me? What did I do? But that just got me closer to the Word, and just more involved in having God be the center of how I do things and why I do things. And so to me, that's been the biggest life-changing piece to it all, is being able to be just closer to the Lord.
See, that's really fascinating, because now you're taking that and you're going through, okay, there's people that are going through an emotional time. And I know this firsthand, because we went through this process in 2022, 2023, where my parents were still living in the same home in Arlington, but it was time that my dad had MS, and it was like, he can't live here anymore.
Right.
Like
it's hard to live independently anymore.
Yeah, my mom, that she can't take care of him.
She's the caregiver. She's got her own ailments.
Yeah, and they're getting physically older, and there's just no way. Like it's to a point to where it could hurt both of them if he falls.
Yep.
And so having to go down that route, I'm like, okay, we've never done this before. Like, how do we find a place that we trust? How do we find a place that can give him the care that he needs? That's within the budget? I mean, there's so many things that you have to go through.
Then you go into those places and you're like, how much a month?
Yeah.
Oh, this one's 5,200. This one's 61. This one's 42.
And I feel bad because my siblings are across the U.S. I'm the only one still here.
Okay.
But I'm busy.
Yeah.
You know, and so you feel
you're the primary person that's got to get it all done now.
And I'm like, I'm trying to help my mom, but I'm also trying to do all the things that I'm trying to do, you know, with my family. And so it's like, if there could be a company or a person that could help be this champion.
And that's the primary objective. Yes, the role in which I play has a lot of different facets. The role that I get paid in is real estate. So if and when a family needs to sell a home and they decide to choose me, awesome. If not, it doesn't mean that I stop doing any less of the work or the helping them through that transition. I mean, sometimes it's just being. I've had a couple of folks call me that just needed somebody to talk to. I mean, yes, they called me to figure out how I could help them, and they're like, "Oh, yeah, well, mom's in an apartment. Okay, great. Well, how else can I help?" And so it's just, I'll be on the phone for an hour and a half trying to help them figure out hey, have you called the placement agent? The placement agent's basically an apartment finder for a senior. They know the ins and outs of these communities. They work for free. They get paid by the community, but it's a free resource to you. Maybe you're more on the lower income side of things, which that happens a lot. And have you looked at Medicaid and how Medicaid planning can help you facilitate getting the care paid for free? There's a lot of different resources out there. VA pension benefits.
Yeah.
Anytime I go into a home and there's a flag on the wall, I say, thank you for your service. And are you receiving aid and attendance? And they're like, what's that? And I'm like, great. So you need to call Clifton Sioux Fall. I'll make a plug there because they can help you with your aid and attendance benefits. As long as you served in a wartime period for 24 hours, I think, then you've got money owed to you, even if you're a surviving spouse. And so that's always cool to see that even the families that we don't help with the real estate side of things is just the guidance that we're able to help them with. There's a lot of resources out there. A Place for Mom, elderliving.com. There's a lot of online resources. And I think nowadays we're very inclined to we don't trust a whole lot of people, and we're a lot of DIYers. So I'll figure it out. We can just get it done with. But for the folks that have gone through it, I'm just sharing my experience, 4 times now of how this could all transpire. And depending on what side you want to be on, do you want some guidance and some help, or do you just kind of want to figure it out?
Yeah.
And just the natural planning of, okay, you get the move settled in. That's probably a 3 to 6 month window of just an emotional toll, not only on you still having to take things up there and visit them, but also on them getting accustomed to a loss of independence, a loss of just not being able to. They just feel like you ripped me from my home. There's guilt involved on both sides. In my grandfather's case, as soon as my grandmother passed, he's like, I'm out of here. I can't do this myself. He was an only child, married for 60 plus years. She did everything for him. So he was like, well, I need somebody else to do everything for me. So in some cases it's really smooth. In other cases there's family dynamics. One sister wants him to go one place. Another one's like, no. People come out of the woodworks when money's involved. I've had some interesting phone calls from families that we've gone under contract to purchase the home, and then I back out real quick once those dynamics come in, because I'm not getting the reputation that I'm robbing grandma. So my business was built with integrity and honesty around real estate and how we can help enlighten you on some different options, whether you want to sell as is, you want to sell it to me directly, or you want to hire us to GC, fix it up, and sell it for top dollar. Giving them some options on how to navigate the sale of the home and all the stuff is one piece to it, and then trying to help them through everything. But this business would not exist had I not gone through everything that I've done the last 3-4 years.
Yeah, that's amazing.
I've learned a lot, and I've lost some, I've won some, but it's been one hell of a journey. And there's still a lot more to go. So it's just it's a look back and like, don't you regret anything? Or if I change anything, it changes where I'm at today.
That is true.
So it's not one without the, like, you can't just not do that thing and then everything else stays the same. You can't just pick and choose the good and the bad of what you want to do in your past.
It's the journey,
It's
right?
the journey.
Not the destination.
So, in the middle of it sucked. No doubt.
Yeah, and so let's recap this. So we've talked about a lot, right? A lot. And so the people, if they're still watching, I appreciate it. if they're watching this and say you're talking to somebody that's has a decent job, maybe they got a little bit of savings, maybe they got a little bit of extra cash flow every month, and they're like, I want to get into something.
Yeah.
Whether it's notes, whether it's single family investments, whether it's short-term rentals, like what advice would you give that person that wants to start today?
Get educated. Don't spend too much time getting educated, but take action. Take action. You've got to take the things that you've learned and go do something. You got to take risk. Owning a piece of property doesn't come without some form of risk. And risk doesn't necessarily mean losing it all. But you've got to be able to take what you've learned, you've read from a book or talked with a friend, whether that took you 6 months, 9 months, maybe 2 years. A lot of us get analysis paralysis, and you're just waiting for that right. Well, this one's not right. This one, at the end of the day, you just got to do it.
Yeah, I'm glad you said that, because I have a lot of friends that are similar to you that have wild success, right? And the biggest thing that I've seen, the difference maker, is y'all took action.
Yeah.
You didn't sit there and analyze spreadsheets for 3 years and then be like, oh, dang, I missed out on that one. And then feel like I can't. So you took action. Imperfect action is better than no action.
Because you know what you're going to get with no action, which is what you're getting today.
Yeah.
But if you're wanting something that's up there, you've got to start climbing. You got to do something.
And I'm glad you mentioned education too.
Yeah.
Because I truly think that's the big difference.
I'm not saying just go buy a house.
Yeah.
If all you've done is rent and now you just want to go own property, get educated first. Try to talk with a lender, learn their vernacular. Try to go talk with a real estate agent. Just talk with people. See if you can, hey, do you have an investor guy that'd be willing to talk with me? Yeah, sure. Just put yourself out there and make connections with people. Real estate is like any business, is relationships.
The amount of information that's out there for free.
Oh yeah.
Between podcasts and YouTube.
Yeah.
I mean, it's mind-boggling.
You could probably go Google or YouTube how to buy a house in 10 days, and you find somebody.
Oh, you're going to
get some hits.
You're going to get into a lead funnel for somebody, but you're going to get it.
There's a guru waiting for your $999.
Sure. The gurus, no offense, but well, cool, man. If somebody wants what's next for you, how can they find you? If somebody wants to pick your brain on any number of these topics, if you're cool with that, how can they find you?
You can find me on Facebook at Logan Hassinger. It's my picture right here. I've been very consistent in my front-facing image, and so it's the same image everywhere. You can find me on my website, sageseniorsupport.com. And then, I'm happy to connect with you on Messenger and then go from there.
Awesome. So, and we'll put all these links in the show notes too, so people can find you.
Awesome.
Man, I appreciate your time.
Yeah. Thank you, Jay. I appreciate it.
Thanks, Logan.
Yep.